Welcome to our presentation on company law, focusing on investment and dividends. Let's discuss in detail. Here's an overview of what we'll cover today: an introduction to company law, investments of the company, dividends, payment of dividends, unclaimed shares, and our conclusion. Let's begin with an introduction to company law. Overview of company law. Definition of company law. Company law refers to the legal framework that governs the formation, operation, and dissolution of companies. It encompasses various legal issues including corporate governance, shareholder rights, and fiduciary duties, ensuring that companies operate within the law. Importance in business operations. Company law is crucial for establishing a reliable business environment. It fosters trust among investors, ensures compliance with regulatory standards, and provides mechanisms for conflict resolution, allowing businesses to operate efficiently and fairly. Key principles. Key principles of company law include the concept of limited liability, the separation of ownership and control, and the protection of minority shareholders. These principles ensure corporate accountability and promote fair treatment of stakeholders. This chapter will delve into company investments and dividends, discussing their relevance to stakeholders and their impact on corporate strategy. Next, we'll explore the investments of a company. Understanding company investments. Types of investments. Companies typically engage in various types of investments, including equity, debt, real estate, and venture capital. Each type has its own risk profile and potential for return, influencing overall corporate performance. Legal framework for investments. The legal framework governing company investments includes compliance with securities law, investment regulations, and corporate governance standards. This framework ensures that investments are conducted transparently and ethically. Risk assessment. Risk assessment is crucial in the investment process. Companies must evaluate market conditions, financial viability, and potential returns versus risks to make informed investment decisions that align with their strategic goals. Strategic importance of investments. Role in company growth. Investments play a pivotal role in driving company growth by financing expansion projects, enhancing operational capabilities, and facilitating innovation. Strategic investments can result in competitive advantages in the marketplace. Investment decision-making process. The investment decision-making process involves identifying opportunities, conducting due diligence, and aligning decisions with corporate strategy. This process often requires insights from finance, strategy, and risk management teams. Now, let's move on to dividends. Definition and importance. What are dividends? Dividends are distributions of a portion of a company's earnings to its shareholders, typically paid in cash or additional shares. They represent a tangible return on investment for shareholders, reflecting the company's profitability. Importance for shareholders. For shareholders, dividends provide immediate income and serve as a sign of the company's financial health. Regular dividend payments can attract and retain investors, reinforcing the company's commitment to shareholder value. Types of dividends. Dividends can be classified into several types, including cash dividends, stock dividends, and special dividends. Each type serves different purposes and may be issued based on the company's financial condition and strategic objectives. Legal framework for dividends. Regulatory requirements. Regulatory frameworks dictate the conditions under which dividends can be declared and paid, ensuring compliance with laws that govern corporate distributions. Companies must adhere to these requirements to avoid legal repercussions. Dividends and company performance. The relationship between dividends and company performance is significant. Consistent dividend payments often indicate strong performance and stability, while sudden changes can signal financial difficulty or strategic shifts. Company policies on dividends. Companies typically establish policies regarding dividend distribution, considering factors such as earnings performance, future capital needs, and overall financial health to ensure sustainable and responsible payouts. Next, we'll discuss the payment of dividends. Process of dividend payments. Declaration of dividends. The process begins with the declaration of dividends by the board of directors, who must assess the company's financial capacity and strategic position. This declaration indicates a commitment to returning value to shareholders. Payment timeline. Following the declaration, Companies must provide information on the payment timeline, including ex-dividend dates, record dates, and payment dates, ensuring transparency and compliance with legal requirements. Methods of payment. Dividends can be paid through various methods, such as direct bank transfers, checks, or reinvestment plans. Companies must communicate their payment methods clearly to facilitate shareholder preferences. Challenges in payment of dividends. Legal complications. Legal complications may arise if companies fail to comply with regulations or if there are disputes regarding dividend entitlements, potentially resulting in litigation and financial penalties. Financial constraints. Financial constraints, such as cash flow issues or low profitability, can hinder a company's ability to pay dividends. Companies must carefully balance dividend payments with reinvestment needs to maintain financial health. Shareholder expectations. Meeting shareholder expectations regarding dividends can be challenging, as inconsistencies or reductions in dividends may lead to dissatisfaction and decreased investor confidence, ultimately affecting stock prices. Now, let's look at unclaimed shares. Understanding unclaimed shares. Definition and causes. Unclaimed shares refer to shares that have not been claimed by their rightful owners, often due to address changes, lack of communication, or the death of the shareholder. This can lead to significant administrative challenges for companies. Regulatory treatment of unclaimed shares. Regulatory bodies have established guidelines for handling unclaimed shares, including measures for attempting to locate shareholders and procedures for dealing with unclaimed assets to ensure compliance. Impact on shareholders. Unclaimed shares can impact shareholders by potentially diluting ownership and delaying their ability to receive dividends or other benefits associated with their shares. Companies need to address these issues proactively. Modaraba certificates and dividends. Legal implications of Modaraba certificates. The legal implications of Modaraba certificates are influenced by Sharia law and regulatory standards governing Islamic finance. Companies must navigate these complexities to ensure compliance and uphold the principles of Islamic investing. What are Modaraba certificates? Modaraba certificates are investment instruments associated with Islamic finance, representing a form of partnership enterprise. These certificates allow investors to participate in profit sharing based on specific terms outlined in the Modaraba Agreement. Dividends related to Modaraba investments. Dividends related to Modaraba investments are distributed based on the agreements established within the Modaraba structure. Shareholders receive profits derived from operational activities, which can be subject to varying distributions. In conclusion, let's summarize the key themes. Summary of key themes. Importance of dividends to shareholders. Dividends are a vital aspect of shareholder engagement and company performance. Understanding the dynamics of dividend policies and their implications on corporate governance is essential for both management and investors. Investment strategies recapitulated. The chapter highlights the significance of thoughtful investment strategies that align with a company's objectives and risks. Successful investments require rigorous analysis and adherence to legal frameworks. Future outlook. Trends in company law. Emerging trends in company law, such as increased regulatory scrutiny and a focus on sustainability, will continue to shape corporate governance and investment practices, requiring companies to adapt accordingly. Recommendations for companies. Companies should adopt proactive strategies regarding investments and dividend payments, fostering transparency and communication with shareholders while ensuring compliance with evolving legal standards to maintain investor trust. Thank you for your attention. For any further queries, please reach out to course facilitator or comment below.